Hello, everyone. This is Alan Wang with the Alan Wang Realty Group at Keller Williams, Santa Clara Valley. Happy New Year, February 2025. I hope everyone had or is having a good ski break for those of you that have it and getting back in the flow. All right, I want to get to the presentation about our latest market update, Silicon Valley market update. So first off and foremost, the year starting off with very low inventory, pretty much across the board. Not a lot of properties to buy, and so the buyers that are out there, the bidding wars are back. So is definitely a lot of bidding going on, especially in single-family homes. I still call it the tale of two markets overall. We got the great school districts; those were always on fire. Condominiums, townhomes, single family. If you're not in every great school districts overall, generally single family homes tend to perform the best, followed by townhomes, then condos. Condos are struggling a little bit, condos and townhomes. If you're not supported by a great school district, varies by neighborhood, give me a call and we can discuss your particular case. We are in seasonality though. Seasonality has been more and more of a factor lately. The spring tends to be very low inventory. I am expecting more inventory to come online. Whether or not it will be enough to satisfy demand, that is to be seen. I'm going to talk about today, of course, the usual economic factors: inflation, mortgage, stock markets, and employment. Inflation rate data came in a little higher. We were at 2.7 in November, 2.9% in December, 3% in January. So inflation now is actually a little bit pesky, creeping up a little bit. Something to monitor, especially with potential tariffs that our government may or may not put onto other nations. If tariffs do go through, prices for sure will increase. Or is this just a negotiating chip? We will see. But tariffs would not be good for inflation, and that would likely cause the Federal Reserve to hold rates steady or possibly increase if inflation starts getting out of control once again. And so seeing that, I believe the Federal Reserve will hold steady on their rate cuts. Mortgage rates, they've been hovering again about 6.5 to 7. We had projected that they might have dropped. They did dip a little bit in December, but they popped back up between 6.5 and 7%. Give me a call though. I have some banks that are doing some amazing assets under management type of deals where X amount of money coming in towards your down payment could buy down the rate, and those are very, very attractive. Or you could go with a shorter term loan, let's say a 7-year fixed, while you wait for rates to possibly go down. I always like to present this chart. Again, grandparents, parents, my rate was 18%. You all spoiled. Completely true. We have been spoiled by these 2-3% rates for a very long time. 6.5, 7% is actually a very healthy rate. And so you will see that life goes on. Life goes on. Here's a Wells Fargo home mortgage rate. The last one that came in here, again, 6.75 on a jumbo, 10-year, 6.375. NASDAQ is at a pretty healthy level. I mean, just from the beginning of this year, which really isn't that long ago, we're talking about 6 weeks so far. The NASDAQ has already gained 34% since the beginning of the year. So this is where, again, the down payment and the majority of folks in Silicon Valley come from the NASDAQ, their stock options. And so this is where a lot of folks are getting their down payments, at least in the Valley. And this is a very healthy measure. It's likely why we're seeing multiple offers in Los Altos, Hills, Palo Alto. I've been fighting with 5 to 7 offers, all non-contingent, all anywhere between 500K and 900K over list price. So this is the type of market we're in for these types of homes in good school districts. And employment just keeps kind of ticking upwards. I'm used to seeing this around 4.6% in California, and then every month it kind of inches up 0.1%. And last month it was 5.4. So you can see it just kind of inching upward. I've been meeting with a lot of folks that are good folks in tech that are looking for career changes. They've been looking for work for quite a long time, 10 months, a year, and tech companies aren't hiring. There's a freeze. There's possible some good news, though. I am seeing some friends of mine in the recruiting industry getting jobs once again. And if they're recruiting, of course, companies are looking for AI, the big buzzword AI. If you do anything AI, big data, AI, you should be hired now. That being said, hopefully companies are slowly opening things up, and we shall see. Again, here's another chart: tech layoffs, about 10,000 currently in February. Again, a far cry from some of these big layoffs here. So hopefully these are starting to slow down a little bit and they can get back to hiring. I don't know if that is going to happen, given that there's quite a bit of flux in our nation here. But we shall see how that goes. But nothing that would cause me to worry that suddenly we'll have a bunch of short sales, for example, that I'm not concerned about there. Projection again, tariffs on my mind. On the macro level, are these tariffs going to be real, or are they just kind of flexing our muscles around the world? Tariffs, let's say on China, would be a very bad thing, and a lot of our goods come from China, and that would not help inflation whatsoever. And so it's yet to be seen how that's going to play out. The U.S. has now become a little bit unpredictable. Anything could happen at any given day, and so there's little volatility there. I'm keeping an eye on inflation, that little tick up here, and prices are still high. And again, at what point does the Federal Reserve get concerned that if that inflation measure continues to tick upward, would they even not stand by and hold steady? Would they even increase rates? Again, eventually causing mortgage rates to go up as well. Unemployment, again, slightly up. Another metric to monitor. Again, not worried just yet, but I want to keep an eye on that. What will the Federal Reserve do? Maybe they hold steady for now, but again, that inflation rate is going to be really important. The NASDAQ, as long as the NASDAQ continues to gain, there's going to be a good amount of real estate done in the Bay Area. Sellers, I just want you to be aware of seasonality. Seasonality seems to be more and more of a factor these days. The market used to be hot all year, and the seasons didn't matter. The last couple of years, I have noticed the summers have been slow. Buyers have just been gone. Think about it, COVID wasn't that long ago, and so folks want to travel, want to go on vacation. They want to get out of here. And so we might hit a lull in the summer. And as a buyer, it might be an opportunity. It might be an opportunity during that time. Again, tale of two markets that I mentioned. If you bought in a great school district, great job. Your house is likely doing just fine. Again, non-school district area, single families are always generally doing decently if the price point's right. Townhomes and condos a little bit cold, a little warm in certain areas, a little cold on that front. Buyers, hey, mortgages are up, but I know you got to do what you got to do. Your kids are switching school districts. You're having babies. You're getting married. You're getting divorced. You're downsizing. You're upsizing. You're retiring. There's a lot going on in our lives that cannot just wait for an interest rate. You just have to jump in and do what you have to do for your family. Again, steady rates, 6.5%, 7%. That's the new normal. And it just is what it is. Inventory is low right now, this moment, so be ready to fight and battle. I've had quite a few clients write contingent sales, meaning they wanted to buy a house contingent on the sale of the home. Extremely difficult, almost impossible to execute right now, unless the house is sitting around for a month or two. Maybe we have that opportunity. Otherwise, it's impossible to execute that strategy right now. The market's just too hot, at least in the areas that the school markets that a lot of folks are buying in. But again, as a buyer, monitor seasonality. Just be ready that right now, this is springtime. You're going to have to really, really fight to get what you want. Otherwise, we'll trickle into the summertime. Maybe there's an opportunity there, assuming that the market is just hot all the way. All right, everyone. Alan Wang with Alan Wang Realty Group. Hey, text me 408-313-4352. Call me or email me at alan@alanwangrealty.com. I am always here for you. Have an amazing rest of February, and I will see you next month. Talk to you soon. Bye-bye.